A weaker outlook and increased downside risks could lower Japan's interest rates further. Harumi Taguchi, IHS. The Bank of Japan held fire on extra stimulus and kept the negative interest rate unchanged today. What is your immediate assessment of this decision?
This was in line with IHS views, since the BOJ needed to monitor carefully the impact of the new experience. The bank decided some adjustment for the law applying zero interest rate to the amount outstanding of money reserve funds entrusted to the trust bank. But this was not surprising because financial institutions have requested to the bank, and also the adjustment was aimed toward smooth operations. And as this decision was broadly expected, and also the timing of the monetary policy meeting was just before FOMC, the initial reaction of the market participants seems limited.
Okay, well, soft domestic consumption as well as weak global demand threaten to derail a fragile economic recovery in Japan. In light of these circumstances, would you expect the Bank of Japan to be forced into producing more stimulus in the near future?
Also, the Bank of Japan needs to monitor the impact of negative interest rates more carefully, as weak outlooks and increased downside risks suggest the bank could lower interest rate further before mid of this year. The RS could be in the April if the economy continues to contract and the deflationary expectation revives. But even though the banks will step into more stimulus, the size of a lower interest rate is likely to be minimized, probably combined with other measures, because the financial markets could respond negatively in regard with the soaring earnings of financial institutions.
Lastly for today, which key indicators will you be keeping a close eye on in the short term that can give us more of an insight into Japan's economic performance?
The key indicators are monthly labor survey, financial income and expenditure survey, and trade statistics. The main contributor for the contraction of the real GDP in the fourth quarter of 2015 was consumer spending. Although the drop after the adverse weather effects is likely to lift consumer spending, uncertainty in financial markets and yen strengthening is weighted on consumer confidence on the top of the weak wage growth. So continued sluggish consumer spending and export could lead to slower capex and further destocking.
Thank you, Harumi. Be sure to check back with the Dukascopy TV team for more updates throughout the week. See you next time.